Art, thank you for being with us here today. This is a pretty big week, not to mention that December 15th deadline is very close for what may or may not happen with the U.S.-China trade talks. Eunice brought us some interesting information about China, saying, look, we're going to take away some of these U.S. hardware pieces from our computers. Sort of another shot fired. What is the market bracing for this week as it relates to the U.S.-China trade deal?
Yeah, it's interesting. So when we look at everything that lines up this week, it's a busy week that we usually don't expect to have in December. We're thinking, wow, it's we've had the jobs number, we can cruise into Christmas and then start focusing on the new year. You really can't. So you've got a CPI coming out, you've got a UK election coming out, and the U.S.-China trade deal, probably the largest of all those things. As we look at the Fed meeting, we're pretty sure we know what the Fed's going to do, and that's nothing. The commentary is probably going to be very similar on a month-over-month basis or a meeting-over-meeting basis. But when we look at what's going on this deadline with China, the president's kind of thrown us into a frenzy as to where do we really stand on trade, and does the administration think it would be better to take this all the way to the election, or would they desperately like to get some good news? And I think it's the latter, but you really can't tell this administration. I think we need to get something done. I think the administration wants to get something done and choreograph some good news around trade because of the election cycle. I think we'll probably get to the December 15th deadline and say we're pushing that out because the talks remain constructive.
So what happens then to the markets if you think that there'll be something positive, something constructive? What are the markets expecting?
Well, the two pieces to that. So the markets expect that. So there's some of that good news is baked in. And for better news on trade, a truce on trade from this point going forward, there'll be no escalation. For that to generate positive economic data coming out of manufacturers, there's going to be a lag time there. So I think there's going to be a modicum of disappointment in the first quarter that we get this behind us. We have this smaller deal, this phase one deal. We continue to work towards a larger deal. But still seeing disappointing manufacturing numbers is probably going to have a market that pulls back a bit, but not till the first quarter. It's going to take a while for us to sort of digest this and say, okay, we finally got that phase one deal. From here on, things don't get worse. We're not worried about escalation, but it's going to take a period of time for companies to start making decisions about actually putting capital to use, building plants, and the types of capex that we haven't seen for about 18 months.
So we're in December. This is a really important time to look at the consumer. Obviously, they're out there shopping. I know we spoke before the show started. I can't believe it's December 9th. I already feel pretty behind. How important is getting this consumer data continuing throughout the holiday season to be strong as sort of this linchpin for the economy?
Yeah, you know this. This is your beat, so you know this better than anybody, I think. But the consumer really has been impervious to a lot of that noise around China. And if the consumer doesn't get hit with this latest tranche of tariffs, which would probably start in the first quarter or so, and we continue to see the kind of labor numbers that we saw this weekend. We have low energy prices, relatively low inflation, quietly rising wages. I think this is a consumer that can sort of battle through all of the things that are really affecting corporate America. Right? Corporate America is standing back and saying there's a great deal of uncertainty, so we're not going to put forward expenditures. The consumer has been the opposite of that. Consumer remains resilient. I think that remains the case as long as those things that have built that confidence for the consumer remain in place. My house is worth as much as it was last year. I've got a job where I can get one. Slowly rising wages, all sorts of good things for the consumer going on. I think it's going to ride out this storm. So I think consumer confidence is really what's been driving this economy. I think it's going to slowly transition sometime next year over to some capex spending, which has been flat largely since the middle of last summer. And I think that's going to be the next leg of this rally. The economic data probably starts to improve, but not to the back half of next year.
We had a little bit of a scare last December, I think, for the markets when things really sort of took a turn for the worse going into that Christmas Eve trading day. Any chance that we see something like that again?
Yeah, no. What an amazing year-over-year comparison, right? But where were we last year? We were nowhere close on U.S.-China trade. We had a Fed that was actually tightening rates. So the meeting we're going to this week was when the Fed tightened again last year and talked about tightening 3 more times this year. So that's the big delta in between where we were last year and where we are this year. Now the Fed has eased 3 times. They're probably not going to do anything for a while, but if you were to guess which way they'd have to go next, it's probably more leaning towards an ease than it is raises. I think the bar for them to raise again is much higher than the bar is for them to lower again. So that's the biggest difference. The economic data stream, both domestically and globally, were a lot different in the fourth quarter of last year, so we're probably in a better place. But everyone has that same fear. Everybody I talk to, whether at a Christmas party or just walking down the street, they're saying, "Is this December going to be like last December?" I just don't, I don't feel like the pieces are put in place to say that.